Welcome back. I want us to look at ledgers. How do we compute ledgers? Ledger is where we record accounting transactions. So we must come up with ledgers, balance these ledgers, and if possible, we can come up with trial balance. After coming with the trial balance, we can proceed and come up with income statement and even balance sheet. So we usually start with the books of original entry, whereby there are 4: sales journal, purchases journal, return inwards journal, and return outwards journal. Those are the books of original entry. They are just 4, and they record the credit transactions. Sales journal, purchases journal, return inwards journal, and return outwards journal. So we are talking about that. But again, we need to go further and create ledgers. We must know how to come up with ledgers. Then after ledgers, we must come up with a trial balance to make sure our ledgers do balance. They are okay, there's no error. Then we can come up with the income statement, we can come up with a balance sheet. Now I have here some few transactions. The first one is bought goods. Bought goods. Let me try and see if I can. I don't see if I can really. I can't see where I can really do that really, but it's okay. We're talking about bought goods worth 3,000 in cash. That's our first transaction. And remember, in a transaction, it affects, a single transaction affects 2 accounts, and that's what we call the rule of double entry. 2 accounts. One account will increase, the other account will decrease. So don't forget that. So bought goods worth 3,000 in cash, sold goods worth 6,000 also in cash. He paid wages worth 1,000 shillings in cash. And the fourth is started a business with 12,000 shillings in cash. So I'm going to open the ledgers and transact. I've said the rule of double entry. So just draw the ledger just once. That way. So for the first one, we are talking about bought goods. Anything to do with bought goods is purchases. So right here, purchases account. This side is credit, this side is debit. So kama umenunua vitu na do inapungua, vitu inaongezeka. Therefore purchases account you debit. So utaandika hapa tulinunua na cash 3,000. Fungua hapa cash. Fungua tu hata hapa cash account. Sema mazi tulitumia cash 3,000 kununua vitu. You see, this is the rule of double entry. One account decreases, so we credit. The other account increases, so we debit. Umetumia do imepungua, so upunguze do. In fact, you start with that one, the one that you understand. Nimetumia do kununua vitu, punguza. Then vitu ongeza. 2, sold goods is about sales. Ukisikia jina sold goods is sales. So fungua sales account hapa. Sales account. Sasa tumeuza vitu, tumepata do, which means do imeongezeka. The cash account, you do what? You debit. Hii pesa imetoka wapi maze 6,000? Imetoka kwa sales. So details na kwa sales account, sema maze vitu imepungua. So 6,000 imeenda kwa cash. So the first one is done, second one is done. So the sales account we paid wages 1,000 in cash, which means cash imepungua. So go here, write wages 1,000. Because of my board, let me open just here. Open a wages account. Wages account. Since cash has been credited, wages will be debited. Cash, 1,000. You know, lastly, started a business with 12,000 shillings in cash. Sasa business imeanza na mwenye business amekupatia do ndio uanze nayo business, which means cash inaongezeka, capital ina reduce. So come here, say cash tunapewa 12,000. Imetoka wapi? This kijana started a business is a matter of capital. So right here, capital. Open a capital account and credit, say it's cash, 12,000. It is what? 12,000. So what we need to do is to balance these ledgers, close them. So to close them is to make sure that they do balance. Side hii na hii inatoshana. Debit side is equal to. So here you write balance carried down 3,000. Si imetoshana? Funga. This balance carried down will be the balance brought forward in the next accounting period. So you write here 3,000. This one very simple, itoshane, balance carried down 6,000. Funga. This balance carried down will be the balance brought forward, the 6,000. Here it is 18,000, here is 4,000. Therefore here we shall have balance carried down of 14,000. Why 14? So they must be equal. 14 plus 4, it is 18,000. Sasa imetoshana 18,000. This balance carried down will come here as balance brought forward, the 14,000. Same to the 2. Balance carried down 1,000. Funga. Therefore balance brought forward 1,000. Lastly, capital. Balance carried down 12,000. Therefore balance brought forward 12,000. So I have opened all the relevant ledger accounts. I have balanced them. I have closed. Now I want to prepare trial balance, TB, and I want to do it here. The trial balance. Trial balance has 3 columns: detail, debit, credit. So purchase, come here, write purchase. Balance brought forward iko pande weka 3,000. Cash, balance brought forward iko hapa 14. Sales, balance brought forward ndio hii na 6. Sales 6,000. Wages, balance brought forward ndio hii hapa na 1,000. Lastly, capital, balance brought forward ndio ile na 12,000. So piga hizi side. This one is 18,000. This one 3 plus 4, that is 17 plus 1, 18,000. It means I have done no error. It's very, very okay. So ledgers. If you buy furniture, it's not purchases, it's furniture account, and if you have paid with cash, punguza cash, debit furniture. So this is how we do the ledger